All right, so I'm getting ready to go over a couple of charts, and I'm going to show you guys how to look at it from the strat perspective, as well as the supply and demand zones. We'll also look at gaps, and I'll go over SPY, I'll go over QQQ, and I'll go over probably at least 2 or 3 of the ETF charts. So right now what we have up is SPY. This is the yearly time frame. We always want to start from a macro lens and then work our way down into the details for the more micro lens of time frame. I'm going to grab the price level drawing, and basically we're always going to use like the prior candle or the previous candle to understand what could happen in the current candle. So right now, and if we look at the highest point last year and the lowest point last year, we can see that it's an outside bar this year because we had a higher high than last year and we had a lower low than last year, right? So what we'll do is I am going to make these all right, so that's what we'll do. We'll type in year low and we'll keep this pink. Actually, I'm gonna change the colors up a little bit. I'm gonna do gray, and then for the high, we'll make it yellow. So we'll say year high, and of course this is based on the previous year's high, and we'll make it yellow. Let's go down to next will be the quarter. All right, so the quarter, we'll make this gray and say quarter low. The quarter high is basically just like a couple of pennies above the yearly high. Well, actually, it's $1 above, but I'll just update this one because if we don't add a whole lot of lines, let's just keep it a little bit cleaner. Next, I'll go down to the monthly time frame. You can see last month was a doji candle, and then we came in and very bearish this month. So the low of last month is here, and the high of last month is here. So we'll say monthly high, so MHI, we'll make it yellow. And then we'll say monthly low, we'll say MLO, we'll make it gray. Next, we'll go down to the weekly time frame. So this is last week's low and then last week's high. So week HI, that in yellow, and then we'll do week LO for low, and we'll make this gray. So we can see that based on the lines that we have on this chart, we want to be, probably bullish below the quarterly low and bearish above the weekly high, just based on the highs and lows of those time frames from the yearly, the quarterly, the monthly, and weekly. Then we want to go down to the daily chart. Also, I look at the 2-day and 4-day candles sometimes as well because they can be very informative. So I'll just show you this. When you hover over the 4-day candle, you see this date at the bottom. It says 6/7. That's the start date of the candle. So this candle actually is from 6/7, 6/8, 6/9, and I think it's like 6/13. So 4 days of price action. Same here. You can see at the bottom here, we have this candle started today on the 17th. And this candle is going to close on Wednesday, the 22nd. And so right now what this looks like is that it could be the makings of a two down, and then possibly two up come Thursday. This candle is still forming, so we're not quite sure, but I just wanted to, touch on that for a second. And then the 2D chart is based on every 2 days. And so, like here, 6-9, and then the next candle is 6-13. So this is 6-9 and 6-12. This is 6-13 and 6-14, 6-15 and 6-16, and then today we have a 6-17 candle. So this candle closes on Tuesday, the 20th, I think, the 21st on Tuesday. And so when Wednesday comes, this has the making of a 3 down, 2 up. So a 3-2-2 reversal to the upside. And we have a couple of gaps to fill. So I wouldn't be surprised if, by early next week, Tuesday or Wednesday, if we may get a bullish reversal, because, we've come down quite a bit over the last couple of weeks. We had a small uptrend, and then we went back down into a downtrend. I think we're going to go back up into a small uptrend and hit this gap before we come back down and go down further than 364. So now let's go down to the daily chart. And here I'm going to just highlight the gaps. So I'll just boom, click on edit. This will be gap, and then I'll put daily. This is the daily time frame. Make it blue, and then save as a default. Then this is a way to save time. You just right click and click on duplicate, and now we have the daily gap between these two. I'm going to click on duplicate again, and what I'll do right here for the week low, I'll just right click on this and then throw in 2 slashes and say gap daily. So now we know that this time frame represents the weekly low and the beginning of a gap on the daily time frame. Next, I'm going to go to the hourly time frame, the 1 hour. And with the 1 hour, these dots that are going down vertically, these represent different days. So this is Friday, this is Monday, this is Tuesday between these two lines, this is Wednesday, this is Thursday, this is Friday. So we can see on the 1 hour chart, right? We see a gap here, but it's the same gap that's on the daily chart. So we don't have to do anything there. This gap here, we can see the gap on the daily chart is the same gap we have on the hourly chart. So that's good. We have another gap here. This is not identified on the daily chart. So we'll highlight this one and then right click, and we'll change the text to gap 1 hour. Click OK, and then we'll just duplicate this line. So that's basically it. Over the last, week or so? This is Wednesday. So over the last 2 weeks, we can see that, we had quite a few gaps. 2, 3 gaps. So you can also see what's really important is that this day today ended on the inside candle. And so if we're bullish on Tuesday, we want to take the high of this candle. So it will be a 3-1-2 reversal to the bullish side or upside. And then we'll take that action signal. So outside candle is a 3, inside candle is a 1. If we break the high of the inside candle, this will be a 2 up. So it'll be a 3-1-2 bull reversal, and we'll take it up into this gap, which means that we have a pretty nice move So now that I'm looking at this, we can just make a level here. Click edit. I'll make this green, and I'll say 312 bull, 1 hour, and then I'll say entry. Click OK. And then I'm also going to set an alert that's a couple of pennies prior to, because I don't want to get the alert exactly at the move happening. I want to get it a little earlier. So let's say 367.95. I think that's pretty cool. That's about, gives us about 10 cents to get into position. So let's say 312 bull, 1 hour at 368.06. So I'll set the alert, and I want to know if there's any reversal on that same level. So if we go above 368 or 367.95, we go above this, I want to know about it. If we go below this, I want to know about it. So I'm going to click on create regular alert. Then I'm going to click on create. And so now we have an alert set at 367.95, but our actual entry is at 368.06. And if we get a $10 move, right, this would be pretty solid, because that means we enter into the gap and then we clear the gap, and then we can try to take out this bar. This might not all happen in one day, so it might be safe to get like a, Wednesday or Friday expiration. So I'm going to look at the 375 expiration for a call on Wednesday and Friday next week. So let me just show you what that looks like. So you go to trade. We said Wednesday or Friday next week. So Wednesday is the 22nd. So we'll look at the 375, which is 117. So let's copy that. So right now, if we, let's see, the highest moves so far have been here. So we got up to 1078, and right now the price is at 116. So if we go above this candle here, this is 1.8. So we're looking at getting in at roughly $200, which is not bad because this move would happen on Tuesday and go through Wednesday. So this is an option. We could possibly go from 1.8 to 10.78. Next, we'll look at Friday. So click on trade. Friday's date is the 24th. So 375 is going to be a little bit more expensive. Now, granted, when the market opens up, if the market opens up and let's see, if the market opens up on Tuesday and price goes down a bit and then comes back up, it's going to impact the option prices. So if price goes down a little bit, our option premium contract is going to decrease some, and then we'll be looking at, trying to catch the upside of that move. So right now, looking at Friday, June 24th, 375 is 229. This is a bit expensive for me, so I'm not even going to open that up because I don't want to spend that much money. But just to give you an idea of what that looks like. So now we'll look at demand and supply zones. So we could look at this on a daily basis or on a 1 hour chart. I am going to remove these lines because I don't want to see them. So we're going to remove the rollover lines. Click apply, click OK. So now it's a bit cleaner. Looking at supply and demand, we can see here. So click on the rectangle. You can see price came down, it stopped here, and then it went back up. So this is a demand zone. So we'll just drag it all the way over, and then we'll make it green. Let's take that 75, click OK. Then we can see price went here, and then it stopped and came back down. So we can mark this is a supply zone. And again, these are subjective, right? So I'm going to mark mine right there. Supply zone on a 1 hour. Price came back here in this gap, and there was a demand zone. So we can mark this. Actually, you know what? I'm going to duplicate this one. So duplicate. All right, we got our demand zone. You can see two down, two up. So that's pretty cool. Then you can see price went up. It played in this range here a bit. Price was not able to get above this level at 417. And so we can basically say this is the resistance or supply zone, right? So then price falls down a bit, comes back up, is not able to go higher than the previous candle. It comes back down, it's not able to go up higher than the previous candle. So once we rejected the supply zone, we came all the way back down, creating these gaps and a lot of opportunity to make money on the downside, right? So this could possibly be a demand zone, but it's a gap there and it's a gap there. So it's just basically just a gap. So we're not going to do anything there. And you can see how, just like in this area here, you have 1, 2, 3, 4, 5 candles. It's kind of just aggregating in this one area before it makes a big move. We can see here that price is kind of aggregating between 368 and 365. And so it's been here for a bit. It looks like it's getting ready to make an explosive move soon. So I think it might be to the upside to deal with these gaps, or it could go down further below. But I think we'll go up a bit and then come down a bit further. So this is your entry. And then I like to make my price targets based on the weekly and daily time frames. So now we'll go down to the weekly chart and see what our price targets could be. So if we continue to go down, our next price target could be, well, we already hit that level. So we have a price target at 359.17 and at 354.15 and at 350.51. So these three, I'll change the color to pink to represent our weekly price targets. So week price target. See, I could have just duplicated that, but week price target. All right, and then for the upside, we'll say the next price target is actually at 383. So we'll edit that and we'll say week price target and we'll make it green. And this time we'll zoom in a bit so we can see at the top of this candle, that'll be a weekly price target. Then we can duplicate and we'll say, actually, you know what? We can edit this weekly high. So something to consider. So today's Friday at 4:45. So technically, this is the new weekly high and low. This will be, when next week starts, this will be the previous candle. So what I'm going to do is I'm going to activate this and I'm going to drag it down to the top here. And I'm going to activate the price target and put it above that one. And I'm going to remove this extra price target that's on there. And then I'm going to edit this and say weekly high and then / price target. Click OK. So now we have two weekly price targets, one at 383.9 and one at 416.61. Next week is a short week. It's just Tuesday, Wednesday, Thursday, Friday. We're off on Monday for Juneteenth. And so within the next 4 days, I don't imagine that SPY is going to move past 416. So we don't have to do any additional price targets. So let's go down to the daily time frame. So on the daily, we have a 2 down, 2 down. And so we could look for an entry right here. So this would be our 2-2 bull. So 2-2 bull daily. And this would be our entry. So we'll mark that green. And this is entry to the upside, saying that we're going to be bullish. So 2 down, 2 down. The next candle starts. If it goes above this candle, it'll be a 2 up, giving us a 2-2 bull reversal, right? And we'll be going immediately into this gap to fill that gap. So I feel like this might be a pretty good move on Tuesday. So what I would do is set an alert here. So create alert. I'm going to set my alert for 369.28. So I want to know 10 cents prior to the move. So I'll say 2-2 bull daily at 369.38. I'll set my alert notification. And then I want to know the crossover. So create. So now we have, and this is another thing to note. When you see a reversal happening, whether it's a bearish reversal or a bullish reversal, it'll happen from the smaller time frame and domino into a bigger time frame. So we could see here we have the 1 hour that happens first and then the daily. So that's pretty cool. And again, we're thrown right into that gap, right? What else do I want to show you? I think that's pretty much it. In terms of daily price targets, we'll click on edit and put / so DPT for daily price target. So if we get in at 369.38, our price target will be 370.94. Then our next price target will be at this weekly high. So we can say week price target, and I say day price target. I think that's good for now, those two. And then on the downside, we haven't been below this level in a really long time. So price is currently at 365.86. So it looks like this might be a daily price target here. it's a little lower. So we'll put DPT and then we'll make it pink. And so it's pretty close to the weekly price targets. So I think that'll do. Yeah, that's good for now. So this is pretty much our SPY chart now. So if we look at this on an hourly time frame, we have a lot of information that we can consider. And as prices moving, we have our notes on this right-hand margin to give us information as the price actually moves between these levels. So we understand that price can move. Basically, we have a clear idea of what can happen between 410.64 and 350. So we have a nice level of insight, at least for $60 of price action, right? So we don't have to change this chart at all. We can just continue to add to it. What I like to do is just like save it as my default chart. So right now in the 001, I'll go to default. I don't need this anymore. This is for last week. So I'm just going to clear this out. And now we have the 001. I wish I would have had as default, but anyway, this is our chart for SPY. Hopefully you were able to follow through along with that. I'll close this video out and then I'll go into QQQ next.